Hello, everyone. Welcome to the stock-specific class here for Thursday, April the 22nd. Sorry for a little bit of a late start here. We had that kind of that breaking news that happened about an hour ago on the infrastructure bill, and the market completely reversed and started selling off. And I had some long positions that I'd gotten into. I had to get out of on that reversal. So it's been pretty. A pretty intense last hour. Aside from that, trying to get the class ready to go too. So I wasn't too late, so that's a good news there. But let's go ahead and get started. Now, one thing I do want to start off the update is something I've been talking about. I said the market is in an overbought condition. We talked about the different signals we've been getting, the warning signals we've been getting, and if you've been listening to the updates over the last few, I've said we're just kind of waiting for a trigger. What's the trigger? And a lot of times the trigger comes out of nowhere, or we're not expecting it. And I don't know if today's news was the trigger, but that's how these things happen. And it may not seem like that big of a deal. They're debating right now whether the raise in the capital gains tax is good. How that's going to affect the market. It could end up being nothing. With these triggers, you don't know what the trigger is until you're looking back in hindsight. And so we'll see. We'll see if this leads to a little bit bigger sell-off. We'll take a look at the charts here in just a second. But it's a good lesson. As you go through these things, that's the whole point of doing these updates and the live stuff is to give you kind of the real-time training that you can't always get in kind of the classroom type setting. When you can kind of experience these things leading up, you experience the signals that we talk about each week, bullish or bearish, and then what happens, you're able to see what happens. It gives you the confidence to trust what you're learning. It also teaches you that there's no crystal ball. There's no one thing that tells you exactly what the market's going to do. And that's always important to understand it. Every instructor out there always says it. We can't know exactly what the market's going to do. But I remember this as a new trader. It took me a while to understand, to believe it myself or to realize it myself. And when you do, then you start focusing more on analyzing probabilities and not looking for the exactness that you desperately want, that everyone desperately wants. But if we quickly go through the direction alerts, one thing I'm going to spend a little bit of time on today in the training at the end of the class is talking about market breadth, what that is and why we look at that. But as far as just the signals, we with the selling that happened earlier in the week, we did back off. The momentum backed off of its extreme range. It wasn't that extreme range. Breadth is in the extreme range, and we're going to talk about what breadth is, like I said, a little bit later on. So I'll save it till then to spend a little more time on that. And we're getting the sentiment is very near the extreme range, and even when sentiment's in the high range, you have to be a little bit worried about a possible pullback or reversal. It doesn't always have to get into the extreme range to get that. As far as let's flip over and look at the charts, and we can see the reversal is taking place. All right, so you can see. Well, you can see why I went long yesterday. We had the start of the pullback right here. It was the first time in a long time we had 2 down days in a row. I had actually some short positions at that point, thinking that here we go. We finally had some follow through. We had a down day and then we had follow through to it, And then we get yesterday where we had that big bullish reversal. Now, the one thing I was really worried about yesterday, though, is that it felt like a setup. It felt like kind of the suckers rally. I don't know how to explain why. It's just I've been through these a number of times where you sometimes before you get a decline, you gotta, you have to kind of shake things up a little bit, and where we were at, to have it reverse, have that bullish reverse right there after getting all these overbought signals, it just felt like, this feels like kind of a possible little setup here. So I didn't get into too many long positions because of that, and they're really small risk positions because I just thought, this, like I said, I just had that feeling. But on the flip side, sometimes you will get a move like this, and it does advance just a little bit higher, and then that creates enough to fuel the selling. I've talked about this a number of times, but I think it's important to kind of go through this is to have something a little bit or to remind us of what creates moves like we're seeing right now with the market reversing like that, and why today is significant when it reverses like that. If you think of your own individual trading and psychology of your trading, when every time you get these little pullbacks, these little dips, you start to get a little bit fearful. Maybe you get shaken out of a few trades, you lose a little bit of money, and then they rebound, and now you chase back in. You start chasing back in. Every time that these dips get bought, what it creates is it starts to create that psychology of this is going to go up forever. Why am I getting afraid of the dip? In fact, what then happens is every dip you just go buy more, or you buy more aggressively because you just know it's going to go back up, because that's what it's been doing for the last period of time. And nobody wants to feel like a fool. And so when you did feel like a fool early on, when you sold the dip or you panicked on the dip and got out, each time that rebounds and goes higher, you get more and more confident. And that's why these dips have been very shallow. You haven't had more than 2 down days in this stretch right through here. Is people were confidently jumping back in. This is going to go up forever. And then what happens is you get, you start to sell off. And what fuels those big down moves is that people start buying the dip, so confident it's going to go back up, and then it doesn't. And this is a prime example right here of what that could be creating right here, because here we finally had 2 down days in a row. People bought the dip, or they bought in on this day when it rallied back up yesterday. Positive, we're going to go higher right here. And then you get this news that breaks. And again, remember I said, when I talked about the trigger, it all it has to be is a reason to sell. Remember, these big institutional traders, they're the ones that are driving the market. They're the ones that are going to be pushing it up and pushing it down. It's not the retail traders. It's the big institutional traders. They've got to have a reason to get out of a market, particularly this strong. They have to have a reason to sell. They can't just simply sell because, we're overbought, or we've gone up so far so fast. Because if the market keeps going higher and they're missing out on those profits, their bosses they're going to get fired, or they're not going to get promoted or whatever. So they've got to have a reason to sell. And again, it could be anything, but this is something that could be a reason to sell. And when you combine it with the context of what's going on with that rebound rally yesterday, this is what can really fuel panic selling. Now, I don't know. We'll have to see how this unfolds. Because again, like I said, if I could be absolute and say this is definitely going to cause a bigger sell-off, then I'd be off the phone with you right now and start shorting everything I can get my hands on. I'm not, but I just want to teach you kind of what psychologically is going on, and then when you combine it with everything else, all the technical indicators, we're at the top of the trend right through here. Overbought signals on breadth and had been on momentum, and we're near it on sentiment. You have to be aware that this could be the start of a little bit bigger pullback, and it might just be a pullback like we saw back here. But you can kind of see, even on this, you had a bearish reversal day right here. Here it opened lower and tried to rally back up. Here it opened down again, so it gapped down, tried to rally back up. Here it gapped up and then reversed, and then that started that first drop right there. And then you had a couple days where it rallied back up, people thinking, oh, here, buy the dip, here things are going to be fine, and then bam, you get slammed back down, starts to come back up again, and bam, goes down. Now that if it chops back and forth like that, that's good for the longer term trend, because you would assume that, remember when we did this talk about stair step, when your pullbacks are more choppy or sideways, so this is pulling back, but it's more choppy, more sideways, it usually means that trend is going to continue. That's what we call a corrective move. It usually just means it's a correction within the trend. So you notice how this is a little bit more choppy as it pulled back. Didn't drop so sharply. I would have to go back a little bit further to see a much sharper drop. But if we really have a really big down day, a big spike in the VIX, it could be that this is starting a much bigger correction. And to be honest with you, that's kind of this is a different update than I probably would have been giving you if I was doing it yesterday, because we did have that strange kind of bullish reversal. It looked like maybe it was possible that we grind still a little bit higher. And more specifically, we were seeing it in the Russell 2000. That had like a 2% or 1.5%. I can't remember the percent move that the Russell had. But you were seeing risk coming in. You were seeing going into risk stocks. Some of the electric vehicle stocks really moved up. Here's the Russell. So you had that big little move there. And kind of what I was looking at was, remember I talked about the Russell possibly forming a bearish head and shoulders pattern. And hold on just a second. These seasonal allergies are killing me. And usually, a lot of times, the left and right shoulders kind of end at the same area there. So I thought maybe we'd see, with that bullish reversal day yesterday, that we'd see a rally for a few days, get up to that area, that 228 area, kind of complete that head and shoulders pattern, and maybe drop from there. And we are near the end of the month, and so it is possible that we get a kind of a bearish reversal day today, a couple days where we go back and forth as those big institutional traders try to make sense of that news and what it means going forward. Because remember, the capital gains tax or the corporate tax, raising corporate taxes is going to affect all these balance sheets, and already these individual stocks are a little overvalued, and they're going to have to correct at some point. And so you've got all this stuff again, and that's one other thing to add to that. That's a fundamental thing to add to it. We don't talk much fundamentals in these classes, because I don't really pay much attention to the fundamentals, because we assume as trend traders all that's going to be factored in on the chart, and show up on the chart, show up on the trend. But like I said, you add that to all the stuff we're looking at, and we're close to getting a decent sized correction. And again, it's just a matter of if that news that broke about a little over an hour ago is what's going to trigger it. All right, let's we can go back and look at the other the Qs. We talked on Tuesday how the Qs had dipped back down below the breakout, bought back up a little bit. Now we're right back down. We're at the lows of the day. If we close at the lows of the day and really get a big spike in volume here at the end of the day, these volume bars are a little bit delayed, so they're not going to show it here right now. But that would definitely be a pretty bearish signal. And the VIX, flip back over here and look at the VIX. Look at that. So we had a couple days where it looked like it was starting to move up. It came right back down, and man, look at that bullish reversal right there. So that's definitely showing that those big institutional traders are hedging a little bit. All right. Now let's get into the individual stocks, which I had a few here. I did some of this last night where I was looking for some of these trades, and I reviewed most of the patterns here before or earlier before that news broke. So we'll have to take a look at see if they still look okay. Some of these would be considered infrastructure trades, so they might be exactly what we would need to consider in these conditions. That's important to recognize as well, is that bad news in one area of the market is good news in another area of the market. If some of these stocks are holding up pretty well, it could mean that with selling, it could mean that there's a lot of money going into those areas. So construction is right at the top of the rankings here. I've got a few of these that I like. Right at the top of the list, USCR, US Concrete. Now, most of these have a smaller or lower strength rank, but that's typical in this particular sector. I talked about this before. Basic materials, I think, is another one. I think it's basic materials is another one where you tend to get a little bit lower strength ranks, and it's kind of normal. Because remember, we're looking for 98 strength rank, going from hold to buy. And so if you're getting into some of these sectors and they don't have 98 strength rank a lot of times, it just means that the sector tends to not have those higher strength ranks, and so you can bring that down a little bit. So we're going to stick around right around 90 on here because it looks like that's kind of where the top ones in the list are around. So the high 80s, low 90s is what we'll stick to in this particular sector. And again, we're more importantly, how's the chart look? Because if the chart still looks good and it has a pretty high strength rank, it should have still that pretty high probability of working out. Let's take a look at USCR. Switch this over to signals. And well, let's switch it to candles here real quick so you can see. So we had the bullish reversal day yesterday. It's kind of continued that despite the selling in the market right now. Looks like we've come off the low. The Dow's down 320. But what I liked here was it was right on that trend line, right on the support of that trend line. And again, I like when you look at the uptrends, you like to look at that impulsive where it goes strongly upward, and then when it pulls back, it's more choppy. And it can, it doesn't always have to be that A, B, C. It could just be just going back and forth like this. And you kind of have that, here you had this move higher. Here you kind of have A, B, C as it came back down, held that trend line up, went to a higher high. And then this dropped, but notice how it's dropped in more of that kind of choppy fashion. And by the way, when we draw out these ABC patterns, there's different ways that they can look, obviously, because the markets aren't going to move in exact fashion. But the idea behind the ABC pattern is you get that initial sell-off, which is wave A, And wave B tends to be, it's commonly referred to as the suckers rally. And it tends to be more choppy. It can be a rally up, or it could be real sideways. So sometimes you'll get that attempted rally back up. That's wave B, and then you get that final sell-off that kind of flushes out the weaker buyers, and then the trend continues. Sometimes, though, you get that initial sell-off, and it can move kind of sideways like this, and then you get that one more drop, and then it moves higher. Let me draw that up. We had a lot of drawings there. So initial sell-off kind of moves sideways, and then it drops. So that's still wave A, wave B, wave C. And that's kind of looks like what we have right here. This initial sell-off right here, it's kind of moved sideways. You had that one-day drop, and then you had the bullish reversal day yesterday, and it looks like that could be, wave A, wave B, wave C, and takes off. Now we're at a critical spot because we're right at that trend line. We're right at this breakout area right here. Remember, this week has been crazy, but I believe it was on Tuesday we did trend lines, right? I showed how to draw trend lines in that class. And so it's kind of at a key spot. It reversed at a key spot right here, both at a horizontal support area. What used to be resistance or the ceiling is now, we're expecting it to be the floor. It's on the support of the trend. Every time it pulls back to that area, it rebounds. And then you could just simply wait for it now to go back to a buy signal, which it has a little bit ways to go to do that. It's a little bit on the left side of that midpoint. When it gets over here, it'll be close to going back to that buy signal. That one looks pretty good. Let's look at another one in that sector, just right below it, CCS, 91 strength rank, Century Communities, kind of the same thing here, right at that support of that trend. It's a little bit down. Had the bullish reversal day yesterday, big drop right here. And it's possible this could be your wave A. Wave B attempted to go higher right here, and then you had this sharp drop right here to that trend line. Let's see if we could wait for that to go back to a buy signal. That's in the same spot as USCR, a little bit to the left of the midpoint of that hold. And then let's look at there's one more in here, right below that, CNR, 89 strength rank, Cornerstone Building Brands. Again, you're seeing the same, it's almost like the same chart. Right, the support, you're reaching higher highs through here. Again, notice the behavior, impulsive, and then as it pulled back, it was more choppy. Impulsive as it broke out to new high, it's been pulling back and kind of a choppy behavior. That's typically how your uptrends will look. Doesn't mean that it's going to go up from here, though. Doesn't mean you're going to get an impulsive move up. But you can also draw a horizontal trend line from that breakout area right there. By the way, you see me just draw stuff quickly, and this is what happens when you just keep working on this over and over, and you're just looking at chart after chart after chart, put the work in. Now I get it. A lot of you are using the software you don't want to put in. You just want to find trades. You don't want to have put in the hard work of reading charts and things like that. But I have to assume that many of you they're taking the time to go through these updates and go through these trainings, or at least part of you wants to learn this stuff for yourself or increase your skill. But I started where all of you are starting. And, you know, it eventually what happens is this stuff just jumps out at you. You know, I pull up a chart and I immediately see that stair step. I don't even need to draw the trend line in. I can see that it's right at the support of that trend. I can see it broke out from over here. I can see the bullish reversal candle. And that's the point you want to get to because you can go through, you could look at 500 charts in 10 minutes or whatever. It doesn't take you very long because you know exactly how to recognize a strong trend and a weak trend and trend reversals and bearish trends. And when you can do that, you can trade either way. You can trade if you know how to trade options, you can trade options. You can trade stocks, and that's when you can really that's where you really can get the edge on the market is and be able to trade with those professionals when you can do that, because that's what we're doing. All we're doing is reading what the professionals are doing. We're reading these charts. All right, retail. Kirtland's right here. We've talked about this a few times. This one I still like it. You could now. There's another way you could trade this, and it might be when it goes to a buy signal. But you've got the support right here, but you also have resistance up here. We're forming what we call a triangle pattern, because these are eventually going to connect. You can draw. Well, you would draw it right there. There's the base of your. These are gonna connect at some point, and then this is the base of the triangle. So there's your triangle. Now, when these break out, the rule of thumb is that you take the base of the triangle, which would be this move down right here. This is the base of that triangle. Project it from the breakout area, which would be right here, and that gives you kind of a minimum target of how far that stock should go if it breaks out of that triangle. Now, could it be that we're not done with the triangle? We rally up to here and then pull back to here, and then rally up to here and pull back to here. Yeah, it could be that we're just back and forth for a few more weeks before it breaks out. And that's why you could just wait for that breakout, because that way you're not caught just sitting there waiting for it to break out. And if it does, you have a pretty high probability of it making at least that move. It could be higher than that move, but it gives you kind of that minimum target. All right, and another retail one I like. I think it went to a buy signal today. Was Big 5. I think I've pulled this one up a couple times recently. Yep. Now this is another one where you could, even though it's gone to a buy signal today, you could just wait for that breakout, especially with the current market conditions. Although we've come off the lows a little bit, Dow's down under 300 points now. This is another one of those triangle patterns, though, where if it breaks out, that would be your base of your triangle. It should go up about that same distance. All right, let's look under basic materials. VRTV right here, 94 strength rank, but this was one of those sectors that tends to have a little bit lower strength ranks in them. What jumped out to me on this one is just, you're getting this sideways pattern right here. Now, again, the stocks can stay in those sideways patterns for a while. But this is another one where you could wait for the breakout. If it breaks out of a range like this, usually you can take the top of the range to the bottom of the range and project that distance upward. That gives you a minimum target. So you could just wait for the breakout on that. And there is been some movement in some of the mining stocks and gold stocks and things like that. So they might be ready to run. So this might be about when they'll break out of those ranges. Freeport Mcmoran Fcx. This is again, you can kind of see there's kind of the breakout area right there. You got kind of the rising support, another kind of triangle formation. Freeport FCX is a good one if you're really a really good one for trading copper if you think copper prices are going to move higher, but it's also a gold stock. That's the thing with all these miners. We sometimes say, oh, that's a gold company or that's a silver company. They're everything because they're these big companies aren't going to pull out. They pull out all this gold out of the mine, and it's got copper mixed in there. They're not going to say, well, let's just check the copper. We're a gold mining company. No, they're going to sell whatever they pull out of their mine. So yeah, it's true that they tend to pull out more gold than other commodities, but you got to be careful talking about it as a gold company or a copper company or a silver company. They're pulling whatever they can out of those mines and selling it. So, but this one is one that is kind of a proxy way to trade copper or gold, and usually both those are moving in the same direction most of the time, or a lot of the time. So, but that's one that, again, you could wait for the breakout on that as well. And let's do one more under transportation sector. Rail, freight car, America, 90 strength rank. You have potentially the higher low right there. Had this big bullish reversal day right there. We'll see if that ends up holding, but that reversed again right at the breakout area there, right where this is where you had the previous high. It pulled back, it broke out of that, and now it's pulled back to it. Looks like it's starting to move higher here. So you got to have 2 points to draw that trend line. It looks like that's the low right there with the way it's behaving, but it doesn't mean it can't come right back down again. But this is kind of at that critical spot. I would assume that by the time it goes back to a buy signal, it'd look a little bit more like it is rebounding off of that support area. Give it a little bit more confidence it's going higher. And it's right about halfway in that hold range, so it has a little bit of room to go there. All right, let's get into the trading. Now, the trading today is going to be a little bit more basic than it's been. I've got to brainstorm with Jesse to come up with more topics to train on, because we've been doing these trainings now since December, and we've covered a lot of what you would normally learn about technical analysis and things like that. So, and using the site, but there's a few other things that we will be able to train on. But I thought the other day, I think it was Tuesday when I was doing the market update. We were spending some time on these signals. We were talking about Brett, and I remember back when I started trading, some of these terms I didn't understand. I'd hear them all the time, but I didn't understand exactly what they were. So, knowing that sometimes in these classes I deal with some beginning traders, I thought I'd kind of point out some of these things, so you don't have to wait as long as I did to learn what they mean and why we look at them. But Brett, and there's different types of Brett signals that we can look for, in different ways we can look at Brett. But basically, Brett equals participation. Is there participation in the move that the market is making? and the more participation you get, the healthier the move is. Now, just like everything, you can't focus just on breadth. You can't focus just on one indicator. You want to put it in another piece in the puzzle as you're analyzing these things. And that's why we have these different indicators that we analyze. Because when they all start showing certain things, then we know that we're close to some of these bigger moves or reversals, or that the trend is fine, that the trend could reverse. And that's what makes it easy, is that we have this platform here that, when you get into the extreme, it means you're at risk of a bearish reversal. Now, but why? Why would that be something you'd have to be concerned with? Well, breadth, you'll hear people on CNBC talk about the breadth of market, particularly right at the end of the day. They'll talk about how many stocks are up versus down. How many, here the advanced decline. That's one way to measure breadth, is how many stocks are. So if you have an up day, and you have, let's just use the Dow 30 for instance, because it's 30 stocks. We're not dealing with a huge amount here, but let's say you have an up day in the Dow. The Dow's up 200 points or something like that. And you look at the Dow 30 and, 25 of those Dow stocks were up for that day. 5 of them were down. That's really good breadth for that 200-point rally right there, because the majority of those Dow stocks were participating in it. There was a majority of them that were causing that 200-point move higher. Let's say that Apple had, now remember the Dow's a good example of this, because Dow's a price-weighted index, which means that the higher price stocks in the index have a bigger impact on moving the index. Now, I haven't checked recently to see who maybe I could take a quick glance here. So right now it looks like Goldman Sachs, Home Depot, Goldman Sachs at 331, Home Depot's 321. Okay, so Goldman Sachs is the highest priced, at least just glancing real quick here, highest priced stock in the Dow. Okay, so the movement of Goldman Sachs is going to have a bigger impact on the movement of that index. Okay, so let's say Goldman Sachs reports earnings, they blow away their earnings, and they have a big gap up, has a big move up off of their earnings report. And the next day you see the Dow is up 200 points. But when you look at the breadth within the Dow, you find that, yes, Goldman Sachs was up, and maybe 4 other stocks were up. JP Morgan might have been up. That's a Dow stock, and it's in the banking sector, so maybe it went up as well. American Express, or is American Express still in the Dow? I'm trying to remember now. They've done some shuffling over the last little bit. But anyway, so there's 5 stocks that are up, and the rest of them are down. Well, that causes me not to trust that 200-point rally as much, because there was only a few stocks that caused that move. The rest of them were actually saying the opposite. The rest of them were saying, hey, we're not having a good day. Now, if you get to a market that's overbought and it's some of these extreme levels, and suddenly you have days where there's fewer stocks that are causing it to go higher, the rest of them are starting to drop, that could be an early warning signal that you're about to get a trend reversal, that the stocks that are already peeling away, they can't hold on any longer. They're already starting to sell off, but it's not showing up yet in the index because there's a few stocks that are still able to push it higher. So if I start to see, you know, very few stocks up versus the more stocks are down than are up, yet the market is still moving higher, then it could be a signal that, and all the other indicators are showing that the market could pull back. Again, you can't just focus on just the breadth, but you look at the big picture of everything else. Maybe we had the market gapped up. Maybe you had I talk about that bullish reversal where you get these candles where the market is moving higher, closing higher than where it opened. And then you get a day where it opens up, it gaps up, but then it trades lower. It's a red candle. It's still going to show that it's up because here's where it closed the day before. Here's where it's at. It's still up from the day before, but it's down from where it opened. That's a strong bearish reversal candle. I've taught that before, and if you haven't learned that, or you're learning it now. So if I see a bearish reversal candle in an overbought market, and I look at the breadth, and yeah, the market's up today, but it's only a few stocks that are causing it to be up. The rest of them are down. I'm getting out of long positions. I might short. I'd definitely be looking to short in that situation with the expectation that we're going to get some movement down. Now, breadth indicators are not necessarily long-term by themselves. Day-to-day breadth indicators aren't going to be long-term signals, and you got to be careful not to read too much into it. You could have a day where the breadth is negative like this, where it's the market's up, but very few stocks are participating, and then the very next day it could flip-flop. Okay, one of the reasons why I turned a little bullish yesterday was that we had the SPY was up. It had opened lower. Remember, it had reversed. So that's a bullish reversal day, closed near the highs of the day, and I believe it was like 4 to 1. 4 stocks were up for every one that was down. Might have been 3 to 1. I'm trying to remember now, but it was very strong breadth for that day. But did that last? No, it didn't last. We're reversing today. Well, I haven't looked at the breadth numbers yet for today. Usually you look at them at the near the close, because otherwise you could be down or up right now and then be down or up reversed by the end of the day. So usually you'll look at that at the end of the day. Also, we'll have to see if there's stronger breadth to the downside, which I would assume there is, because I was looking at a lot of charts that were moving. Although like I said, we're coming off the lows of the day here a little bit, so that might change. All right, so that's one way that you could use breadth. Another is you could look at there's algorithms that will track will smooth the process out over time, and you'll get kind of these little trend lines or these little lines right in through here. You can see the green line is the breadth indicator, so you can see it kind of rising right through here. Now you can see all these have dropped recently. Momentum, here's sentiment, here's breadth, here's momentum. Momentum we talked about on Tuesday are having dropped ahead of all this. Now, if you come down here on Traders Pro, remember this is the chart of the SPY right here. And then you have your breadth indicator down here. So when breadth, so during the uptrend, you see the breadth was continuing to move up with the market. It was moving up kind of nicely with the market. Now, as it got above this red line right here, though, is where this is not extreme, Remember, extreme is 80. Well, actually, it is right there's the 80. When it gets above 80, 80 to 100 is the extreme range. And we can go back up here and you can see. So 80 right here to 100, that's what it's showing you, saying, okay, when it gets above 80, and it explains it right here too. Now you say, well, wait, why is that a bearish reversal? It's strong. The breadth is really strong. There's a lot of participation. Well, to kind of explain how you kind of have to start to become a contrarian when it gets into that area there is, another way that you can kind of measure breadth on Traders Pro. If you go into the indexes right here, the index tab, we've looked at this a few times. It'll give you a ratio of buys to sells. And I don't know if you remember a week or two ago, it was a couple weeks ago, that the Dow, here's the Dow Industrials. The Dow Industrials, right now there's 15 of the Dow stocks that are in the buy range. There's 7 that are in the sell range. It's a little over a 2-to-1 ratio. Well, a couple weeks ago, we were at like 25, not 25, it was like 20. It was like, there was like 12 in here or something like that. And there's like 2 in the sells. So there was like a 12-to-1 ratio. That's what we're seeing in the utilities right now. You've got 12 buys, 0 holds, 1 sell. That's anytime you get double digits in the ratio there, what it's telling you is that everything's now in the buy range. Well, when everything's in the buy range, you got to be getting close to a pullback or reversal, because you can't have everybody going higher and higher and higher forever. At some point, there's nobody left to buy. And so when you start to see these ratios get pretty extreme, and they were pretty extreme, you'd have to go back. I don't remember the exact ratios they were. I can't remember the exact day I did it, but there was a lot of them that were in the double digits. And that was kind of signaling that from a buy hold or buy sell standpoint, it was signaling that we were getting into that extreme range. Okay. And by the way, the opposite is true. When we were in that massive sell-off when COVID hit last year, the market just tanked. We saw no buys. There was like hardly any buys. Almost everything was in the sell, and it had huge ratios. And that was signaling a bottom. It was signaling that, yeah, it's possible the market could go down a little bit further, but it's already caused a lot of damage. You're probably pretty close to a bottom at that point. And again, we're not using breadth to make a exact decision, but if I see that there's huge negative breadth and it's showing an extreme oversold or extreme condition the other way, then I look for a bullish reversal candle, or let me go back to and we don't get, you don't get to the bearish extremes very often, just because bull markets tend to last longer than bear markets. Bear markets tend to be real short, but sharp. And so, but if you get back down into this range over here, the market's been dropping. What I would look for is a gap down, a big gap down, and then a rally up. That'd be a big, strong bullish reversal candle. Or I'd wait, if I wanted more confirmation than that, I'd wait for it to, maybe have an impulsive move up and then have a corrective move back to where it starts to look like it's stair-stepping up. Remember, when you're stair-stepping up, you have impulsive up, corrective back down, impulsive up, corrective back down. When you're in a downtrend, it's just the opposite. You have impulsive down, corrective, choppy corrective back up. So I'd look for, at a bottom, usually at a bottom, you'll have impulsive down followed by impulsive up. So I'd look for that impulsive down, impulsive up. And then on the next correction, on the pullback, do you see it more choppy? And then it gives you that higher low. And you look, you could wait for even more confirmation for it to go to a higher high. But if I'm in that extreme bullish reversal range, I know that we've gone down too far. A lot more stocks are dropping than rising, and they've done that for a while to where they've created that extreme, and then you start to look for some sort of bullish reversal on the chart. Okay. Now, hopefully that helps a little bit. The bottom line is that it's real easy just to, okay, we're in this extreme range. Breadth is extreme. Let's keep an eye out for any sort of a bearish reversal on the chart because we're in that condition. Let's see if there's a trigger that triggers a selling, that comes out. That's how you can read it. So it's real simple, but you sometimes kind of want to have a better idea of what, and I'm not going to go over the exact algorithm that's creating this, but at least to give you an idea of what breadth is, why, what makes it important in our analysis. And hopefully I was able to kind of clear that up a little bit in the training today. There's a comment here. Actually, my name's Jerry. I'm Jerry McCann. Jesse is the founder of Traders Pro, but I do the updates here on these. But you know what? The funny thing is I've been working with Jesse for, how long has it been now? Like 15 years, 14, 15 years now, I think, something like that. And people always think that we sound the same. So, so I guess no one can tell. But if you go and listen to like the recordings, that a lot of them are done by Jesse, you can kind of tell the difference there. But like I said, we've been doing this a long time, and we're pretty much, if Jesse were here, he'd be talking about the same thing. So, all right. Thanks, everyone. Have a great week. We'll see you on Tuesday for the next market update, and we'll see if we are getting that sell-off. I mean, we should probably have a pretty good idea by then. By the way, just to keep in mind, if we do get a big down day tomorrow for some reason, and we close near the lows of the day, usually markets don't bottom on a Friday. This is just kind of one of these things you get used to over the years or learn over the years. So there'd be a pretty good chance that we would gap down or open lower on Monday. And it's possible if the selling's sharp enough or extreme enough that it could gap down and then start to reverse again, start to move back up again. Because at least as of right now, I'm not expecting a massive correction, but it's always possible that it morphs into that. But I think we're due for at least a decent correction just to shake people a little bit, get some people a little bit nervous or a little bit worried. That's usually healthy for the uptrend to have some of those pullbacks that are deep enough to do that. And we'll see how that plays out. Who knows? We could be looking on Tuesday and the market just shook this off and moved higher. That's always a possibility as well. But as trend traders, we don't care what the market does. We just want to recognize the trend as best we can so we can trade with the trend and kind of go from there. All right. Thanks, everyone. Have a good weekend. Bye now.